Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me once again Dr. Marc Faber. Now, he is the author of the highly acclaimed Gloom, Boom, and Doom Report, which you can access at gloomboomdoom.com. Now, Marc is the author of several books, including Tomorrow's Gold, Asia's Age of Discovery, which was first published in 2002. It has a lot of recognition, was on the bestsellers list for a while. But beyond that, Marc doesn't really need any introduction, though he has not been as frequently heard and seen on mainstream media as he used to be, following his candidly positive view of Western civilization that caused him to be somewhat of an outcast among the politically correct left-leaning mainstream media. What seems to me these days that anything you say that disagrees with Democrats is automatically termed hate speech, and you may actually be undeservedly labeled a racist. Now, if I thought that Marc Faber was anything other than a kind, generous, thoughtful, and highly insightful intellect, I would not have him on this show. And I believe all of those attributes certainly apply to Dr. Faber, so I'm really pleased to have him with us today. Thanks for joining me, Marc.
Well, thank you very much for having me on your show, and thank you for the introduction.
Well, I believe it with all my heart. You know, I just think it's unfortunate some of the things that are going on right now in the United States in terms of a lack of freedom of speech and thought. We're not allowed to think for ourselves. We have to just take and regurgitate what the professors in the universities tell us and then shut up. So I'm very grateful, Marc, for all that you've done and for your willingness to speak what you believe to be true. So now, Marc, since the Trump tariffs are very much in the news these days, I would like to start out by getting some of your views on that topic. Clearly, the U.S. has been running chronic trade deficits starting with Nixon's move to detach gold from the monetary system in 1971, after which the petrodollar substituted for a gold-backed standard. This new monetary regime allowed those people who benefited from the welfare and warfare state to make significant gains at the expense of the middle class, who lost their higher-paying manufacturing jobs. And it was this class of people living in flyover country in America that Hillary Clinton labeled deplorables, and they voted for Donald Trump. So Trump is elected, and those people elected him, and he seeks, it seems to me, whether he's going about it the right way or not, is trying to reverse the trend that has really hurt the middle class in America. And I know that one of the things that both liberal and conservative economists have agreed on since the 1930s is that free trade is desirable. It's good for everyone, supposedly. But what are your thoughts about Trump's proposed tariff solution? And if you don't agree with rising trade barriers, what would be the solution to a problem that is clearly leading to growing levels of poverty in America and the destruction of the middle class?
Yes, I think it's very important to analyze what has led to actually rising trade and current account deficits in the U.S., which began actually not with China, but with countries like South Korea, Taiwan, and especially Japan, of course, in the 1970s. But actually, if we analyze why a country imports more than it exports, it has frequently to do with a lack of competitiveness. And then you ask yourself, well, why is there a lack of competitiveness? And the lack of competitiveness in manufacturing, especially, arises because there is not enough capital spending and too much consumption. You see, an economy can consume everything it produces, or like a household, it can put some money aside and invest in improving your house, or invest in your business into a new machinery, and the new machinery will then produce goods that you can sell, and it will generate the cash flow and so forth. And I think a lot of the discussion about the U.S. deficit simply blames foreign countries for either having manipulated their currencies, or in the case of China, for having stolen trade secrets and patents and so forth and so on. The fact is simply the U.S. became less and less competitive. Because, say, if you look at wages in Germany, they're much higher than in the United States. Yet the German economy is competitive. It can export cars and make money out of it. The problem is that U.S. products, with the exception of defense industries and some high-tech industries, are simply not very competitive around the world. That leads to the trade and current account deficit.
And so you would attribute a lot of that then to overconsumption and not enough capital formation, I guess.
Yes, if we look at, say, the expansion of the trade deficit after 2001, it had a lot to do with the overconsumption in the US, because at that time, consumption as a percent of the economy expanded by about 10%. It went from roughly 70% to almost 80%. Since then, it's kind of slowed down, this exponential or rapid growth in consumption as a percent of the economy. But it's still, of all the developed countries, at an extremely high level. And the level of capital spending, as you know, is not particularly strong because corporations, despite their huge earnings, are using these huge earnings to buy back shares and not buy new machinery. And they're using it also to pay dividends. But the buyback of shares is actually the crucial factor. The corporate sector should have an incentive to invest in plant and equipment and research and development. And that they're doing it, but not sufficiently.
And so that all makes a lot of sense to me, Mark, the lack of capital formation. You know, you could just simply create money out of nothing and spread it out over the throughout the economy, according to Keynes, deficit spending, and you just get rich that way, which seems to be, just a sort of conventional wisdom. Everybody that takes Economics 101 is taught that in the U.S. But in any event, Mark, there's another idea I'd like to run past you and get your ideas on it. Are you familiar with a term called the Triffen Dilemma?
Yes.
And so this holds out that a country that runs that has a reserve currency must necessarily run chronic trade deficits and export labor in order to make sure there's enough liquidity in that currency around the globe to accommodate trade. Do you think there's any notion? I mean, if I look back at since 1971, look at a chart, and you'll see the U.S. has increasingly run trade deficits since that time. Do you give any credence to that notion that if a world's reserve currency, if you have the world's reserve currency, you must necessarily import more than you export?
No, it's not that you have to. If there is a country that has a reserve currency and it doesn't increase global liquidity, then you have less or no asset inflation. That is clear. Mm-hmm. And because you have a trade and current account deficit, you increase global liquidity. The global liquidity then leads to investments in other countries or to consumption in other countries, and the combination thereof, this global liquidity somehow flows back into the reserve currency country like the US, which has happened in the last, say, 20 years. The US has run a trade and current account deficit, but the money has come back by foreigners in the form of purchases of securities, of stocks and bonds, in particularly bonds, treasuries. So these reserves that flow outside the U.S., they trigger, yes, some economic growth overseas. This is desirable. Mm-hmm. But at the same time, they also then create profits overseas, and these profits then flow back into the U.S.
Back into the U.S. through equities, primarily, you're saying?
Bonds, primarily through bonds.
Yeah, so but what in the meantime, though, we've seen this the flyover country, the deplorables that Hillary Clinton talked about, that voted for Trump. They have become, I know I'm from Ohio, and I know the scenario in Ohio. You have a lot of, hamburger flipping jobs. We used to have Youngstown and Cleveland and Akron, Canton, those places had high-paying manufacturing jobs. Those are all gone now. And people are now working at Walmart for $25,000 or $35,000 a year, where they used to work maybe for $70,000. Those kind of jobs are gone. And yes, we've seen Wall Street get richer. We've seen the welfare warfare state, the people that are associated with those industries in Washington that grows bigger and bigger. And yet the middle class, the people that produced, I would argue, the things that create wealth, those more capital-intensive businesses that you're talking about, manufacturing, mining, some of those basic industries have basically been gone from the U.S., and it seems to me what Trump is trying to do is to bring those back, and rightly or wrongly, he's seeking to do it at least one of his major policy initiatives is tariffs. Now, what are your thoughts about that? If tariffs aren't going to work, and I don't believe they will, but if they're not, what should Trump or anyone do if they're concerned about the deplorables?
Yes, that is a good point. First of all, the so-called deplorables, and I hate to use this expression because some people moved into an undesirable position in their lives and they're not really at fault. Say if you worked in a small town in a mill and the mill closes down, it will be difficult for you to find a job that is paying equally, so your standard of living is going down. But one of the problems, first of all, to answer the first part of the question, I think tariffs are negative in the sense that they will actually increase the cost of living of these so-called people that are poor, have difficulties to make ends meet. And we know that roughly 50% of households in the U.S. have practically no spare money at the end of the month. They really live months by months and they have no savings. So to increase their cost of living, aside from the rents that went up, aside from health care that went up, aside from educational expenses that went up, would be undesirable. And I have to point out that a lot of these costs that went up a lot, as I just pointed out, education, healthcare, rents and so forth, are due to excessive regulation. And there I have to praise Trump. He is trying to reduce regulation, but and he's done so in a number of industries, but there's a long way to go. This excessive regulations make actually the U.S. less competitive than other countries that have less regulation. You understand? Number two, import tariffs will increase the cost of living of some people. And whether the steel industry will come back to the U.S., that is very questionable because it would require heavy capital expenditures.
Right.
And as I said, the corporate sector isn't really willing to undertake these capital expenditures. And it also then the question is then, does it make sense? Will these new steel mills really be productive? And as you know, I mean, you look at, as an example, at the brewery. 150 years ago, a brewery employed maybe 1,000 or 2,000 people.
Right.
Or more. Nowadays, you have breweries that have 20 employees. It's all automated. And so there has been a huge structural shift in society whereby many goods, including cars and car parts and so forth, are manufactured much more efficiently than before. Efficiently meaning the same quantity of goods or more goods are being produced with less and less people. You know, there are some structural issues. It's not just that the Chinese have lower wages and are stealing jobs. That is a simplification of the whole issue, of the whole problem. And then we also have to look at the US. And by the way, I'm not singling out the US. In Europe, it's a similar situation. Many people make a better living by doing nothing than going to work. You understand? Yep. And I suspect, and I know from a number of friends I have, say, in Switzerland, they get unemployment benefits, but they have, say, a side job somewhere where they're moonlighting. So they get the benefits at the same time. They get some pocket money from occupations which they actually don't pay any tax on it. Pay tax when they spend that money, because then they pay sales taxes and so forth. But in general, the whole social security system and transfer payment system by the government is actually discouraging people to work. Then in the US, in some states like New Hampshire and also in Massachusetts, we have some specific issues with drug problems. The opioid crisis is a real crisis. And in my opinion, the government is not totally innocent in this crisis. And the pharmaceutical industry and so on. And what I want to say is a lot of people, maybe they could work if they were sober, but they can't work because they're on drugs. They may not be every day 100% on drugs, but it's sufficiently bad that, say, in the trucking industry, you have difficulties to find drivers because a lot of people don't qualify to drive a truck. They are either drinking too much, like Mr. Faber, or they take drugs, if you understand.
So, of course, some people are proposing then that we just simply give people $1,000 a month or whatever it takes. Don't require them to work anymore. What repercussions would that have for society?
Yes. Well, this is a huge debate about this basic income. And there are some pluses and minuses that argue for this basic income. The plus side is basically you give someone $1,000 a month, and that is just about, is not quite enough for him to survive, you understand? But with $1,000, if he goes and works, he still gets the $1,000 plus the new salary. That is the argument in favor of the basic income. If you have the present system, the moment someone goes to work, he abandons essentially all the things that he's getting now for free. In other words, it may not pay for him to work. Say if his compensation is about $25,000, because that's about what he would get if he doesn't work. So you understand, the basic income idea is that someone who then goes to work does not incur a disadvantage. But I'm against all these programs, and I tell you why. I think all these programs lead to a colossal abuse. At the end, people will have all kinds of benefits and the $1,000 basic income and so forth. You understand? The moment the government will run it, there'll be massive fraud. I mean, we have massive fraud already in elections.
Sure.
You can imagine when this will come about, what the fraud level will be. And wealthy people like myself or Mr. Trump or whoever it is, they will also get the $1,000 as a word. So it's a very controversial proposal. I basically, not that I do say, I have sympathy with certain aspects of socialism. But I have seen, the first time I went to Eastern Europe, 1968, in Czechoslovakia, and later I went in 78 to China and 1980 to Russia and so forth. I've seen the complete misery and inequality and injustice that socialism and communism and the planning economy brings along. Capitalism has many shortcomings, but we have to accept that, many shortcomings. But it's a relatively fair system. The problem is that we superimposed on the free market and capitalism essentially institutions that intervene into the free market like central bank and the money printing. We can show this statistically. The moment there is money printing, wealth and income inequality goes up.
Right.
That should be very clear. But the Fed will say, well, that is not our problem. This is a problem of fiscal policies, redistribution. Right. But it's not quite true. The problem is created by the Federal Reserve that prints money and other central banks, to be fair.
No doubt about it. If you had an honest, let's say, asset-based monetary system that couldn't be created and printed and created out of thin air as the fiat money system is, that you would have discipline on that, on the fiscal policy as well. It wouldn't be a matter of just, well, we just issue bonds and pay for it. Mark, with just not that many more minutes left here, I want to see if we can get to some of the existing markets. I have a good friend, David Jensen. He's a very knowledgeable engineer, lawyer, Austrian economic thinker, who was telling me the other day that something like $2 trillion has been borrowed by Chinese banks offshore, and then they've taken that $2 trillion and lent it into the domestic economy in China. And his concerns are that as the dollar has gotten stronger over the last, a couple of months or so, it's raised something like 5% against the yuan, and interest rates are rising. His concern is that we could see a very significant illiquidity problem, and then you add to that Trump's tariffs. You live in that part of the world. You have your finger on the pulse better than most of us over here in America, I would dare say. What are your thoughts currently about the vulnerability or some sort of maybe like an Asian type 1998 crisis that could occur again, a dollar shortage, if you will, a dollar illiquidity, if Trump starts to do the opposite? In other words, decreases global trade, at the same time the interest rates are rising, the dollar is getting stronger. Are you concerned about this right now?
Yes, I'm deeply concerned about the Chinese economy. Because the Chinese economy nowadays is much more important than the U.S. economy because its manufacturing sector is so large. And don't forget, China consumes, let's not exaggerate, but approximately 50% of all industrial commodities are used in China. So the Chinese economy has a huge impact on all the raw material producers, on the commodity producers of the world. And of course, the Chinese economy also imports a lot of goods, luxury goods, but also capital goods and raw materials. So the impact of a slowdown in the Chinese economy, or possibly, as David Jensen says, a recession or a collapse, that has to be a factor to be taken into serious consideration. I mean, a lot of people have called for the collapse of the Chinese economy for a long time.
Yeah.
And it hasn't happened. But it is true that the debt level in China has expanded over the last 10 years more than any other country in the last 200 years has had a credit expansion. So it's a very unusual situation. And not only China, but a lot of other countries today, emerging economies, they're highly indebted, and a slowdown in economic activity or a tightening of global liquidity. And the symptom of global liquidity, of tightening, is a strong dollar. Whenever global liquidity tightens, the dollar is strong. And when it expands again, when you have global liquidity expanding, then you have a weak dollar. But as you said, the Trump policies, basically, they are indirectly contracting global liquidity. And so the outlook for emerging markets at the present time is not particularly good. Now, having said all this, you see, as an investor, you look at all these macro factors and so forth, and the objective is basically to know, should I own stocks? Should I own real estate? Should I own bonds? Or should I own cash? And so forth. So you then have to decide what you own. The problem is that cash is maybe the most dangerous thing to own.
Why do you say that, Mark? Because traditionally we've always thought what cash is, it doesn't give you any yield, or not much in this market anyway.
Yes.
But if I want to own treasuries right now, I get your point. If you do you see the bond bull market that began in the during the Reagan years? Do you see that as being over now?
Yes. The bull market in bonds on treasuries began on September 21st, 1981. That was the high point of interest rates. And since then, we've been largely in a bull market for bonds. Some will say until July 2016, when yields on the 10 years treasury hit 1.38%. And since then, they've kind of doubled the yields on the 10 years. So you could argue the bull market is finished. But maybe there is an extension of the bull market and maybe interest rates won't go up a lot. But you understand, if you look back at the last 30 years, if you held cash, the purchasing power of that cash in terms of the real estate you can buy, in terms of paintings you can buy, in terms of antique cars you can buy, in terms of the stock market, 1981 The stock market was below 1,000. It dropped to 780 on the Dow Jones in August 82. And since then it's been going up, and you had all the dividends on the Dow. So you understand, by holding cash, you may lose a tremendous amount of purchasing power over time. Normally, it's old ladies that put all their money into cash that die poor. People who become wealthy, they own some kind of assets, either real estate or equities or something that has a higher yield or return than cash in the long run. So I'm saying cash could be dangerous. Then you have to decide what currency. If you look at cash and you say, okay, in US dollars now, I can say maybe 2.5% interest per annum, then you might ask yourself, well, maybe it would be better to hold that cash in the form of gold. You understand? So over the next 10 years, at 2.5% interest, you would earn, say, around, with compound interest, around 30% on your money. But I think the price of gold over the next 10 years has a chance to go up much more than 30%.
No doubt about that. Well, we're just about out of time here now, Mark. But we're living in a very dangerous world right now with the dollar, I think, and what's going on with China building up its gold reserves, encouraging its population to get gold, a Chinese government that would like to get from under the U.S. dollar hegemony, Russia, China coming together, the dollar, and we're seeing, Trump's deficits of over $1 trillion, the Federal Reserve pulling money out of the system now, downsizing its balance sheet. I would argue the shortages that we have in the United States, that is to fund the enormous deficits we're running with, and foreign countries not as willing as they once were to buy treasuries, that we might be in for a lot of pain ahead of us with rising interest rates potentially. Does that bring about then more massive printing to try to get out ahead and keep rates from rising and try to provide a liquidity? To me, there's so many unanswerable questions.
Yes.
So given this uncertainty, Mark, with a minute left, what are you doing? You're a man of some means who doesn't have to worry about your next meal. But for people of, say, more average means and that have some savings but aren't destitute like the deplorables, what should they do?
Well, I mean, one investment that I think is never discussed is education. I think it's very important for people to have a good education. And by that, I don't necessarily mean to be a university teacher or, a rocket scientist. But I think if you are a carpenter, you can be a good carpenter or just an average carpenter. And if you're an electrician, you can be an excellent electrician or just a very normal electrician, and so forth and so on. So there are lots of opportunities. The problem in the US, you have less of an apprentice system than we have in Europe. And in Europe, we have a lot of so-called vocational schools. These are schools. They are like universities, but you just specialize in, say, carpenting or in electrical engineering stuff and so forth and so on. So we have actually, and this comes back to the first question you asked, what to do about the trade deficit. One of the issues in Germany and in Switzerland, we have a relatively highly educated workforce. And the same happens in Japan. When the Japanese left the Olympic Village, their changing room, in other words, where the team was preparing for the matches, were left 100% clean. Everybody was stunned that one team would clean up everything and leave it in perfect condition. And this is what I'm always arguing. When people say everybody's the same. No, not everybody's the same. Some people are tidy and some people are less tidy. And some people are very conscientious and others less. And I think education of your children or even yourself is very important. You should never stop learning something. And I think the asset markets, you will not make a lot of money unless you take huge risks. You understand? There was a huge opportunity in cryptocurrencies. I didn't participate, but I'm saying there are opportunities, but there are also large risks. And the timing has to be perfect. I would just diversify. I would hold some real estate where I live, certainly, and I would hold some equities in case they really print money like there is no tomorrow,
sure,
which is not totally unlikely, and I would hold some physical precious metals. And now gold shares are relatively cheap, but it's a higher risk profile.
Well, we'll have to leave it go at that, Mark. I thank you so much for being willing to spend the time. I mean, I'm talking to you at 1 o'clock in the morning in Thailand. It's so gracious of you to give us your time. I really appreciate your work. I've always done so.
Thank you very much.
And I hope we can do it again sometime in the not too distant future.
Sure.
Thank you. Thank you so much.